You might have been contributing to an employer-sponsored retirement plan, but what exactly are Roth 401ks, traditional 401ks, and the advantages and disadvantages of both?
A traditional 401k, you start with your company, you elect to start putting money into your 401k, and it's in an IRA type account. That means that you get to reduce your taxable income that year for whatever you put into that 401k, and it gets to grow tax deferred, which means you're delaying tax to the future. The problem with the regular 401k is when you start taking money out, now you owe tax on every single penny that you put in, plus all the growth. So it could put you behind the 8-ball in the tax game.
So I have $10,000 in income. I put $1,000 into my 401k. I'm only taxed on $9,000. So that's nice. So that's the advantage there. In my opinion, the other really big advantage of a 401k investment is that money requires you to dollar cost average into the market. So basically what that means is you let the fluctuation of the market work for you versus against you. Basically, it requires you, as you put money in there every single pay period, you're guaranteed that you're going to put money in at the best possible time when the market's going through a dip, where most people are a little bit scared to put money in the market. That 401k is going in there no matter what's going on with the market. So it requires you to put money in at every single paycheck period, and you know that money's going in there every single month, and you're guaranteed that you're putting that money in at a best possible time, because the money's going in regardless of how the market's doing. It's like Warren Buffett said years ago, do the exact opposite of what most people think when it makes a good idea. Do the exact opposite and you'll be a good investor. So that's where that dollar cost averaging really is very important, with the 401k.
There are many upsides to the traditional 401k, as well as some downsides. It's important to note many companies offer, in addition to the traditional 401k, something called a Roth option. Both are retirement savings plans, but there are some differences you should know.
Many of you have a Roth 401k available to you, but no one's ever told you about it. It's in a lot of 401ks, and if you don't have it, you can ask your HR professional to try to get that included. Why is it a good thing, Coach Pete? Well, when you put money into the Roth 401k, here's the drawback. You don't get to reduce your taxable income that year. So if you were making $50,000 that year and you put in $5,000 into your Roth 401k, you still pay tax on $50,000. Wow, that's bad, Coach Pete. But wait, now that money will build tax-free, and when you take it out, it comes out tax-free. It is so much better if you're under 50 years old to utilize the Roth 401k than it is the regular 401k. I know we all like that immediate, what I call gratisfaction, seeing that tax reduction of your money when you put the money in a regular 401k, but that tax time bomb is growing every single year, and it's going to explode all over your plan if you're not careful. Now, I say this with a caveat. If you're in a state with a very high tax rate, as the tax laws exist today, I know some of these states are trying to tax you forever, even if you leave, but let's say you're in California and they have about a 13 or 14% state income tax. You put money into your regular 401k, you get to reduce your taxable income, and then when you take your money, when you retire, you move to a state that has no state income tax. Let's say Nevada. And now when you take the money out, you still owe federal tax, but you won't owe state tax. So there are some ways, there's some caveats, and that's why it's important to deal with a qualified financial planning team who also is a fiduciary planning team. We've got over 100 years combined experience here. We know what we're doing. We've seen every mistake people have made, and the objective here is to make sure that you don't make that same mistake.
There are a variety of factors to consider when choosing the right type of retirement account for you. Timing, the amount you have available to save, and the kind of lifestyle you want in retirement. The thing is, most people only retire once. That's why it's so important to get the facts from people that plan for retirement every day. Coach Pete and the fiduciary team at Capital Financial can help you navigate the financial world to get you where you want to be in retirement. Take advantage of the no-cost, no-obligation financial review to understand the ins and outs of your retirement plan. Also, be sure to like this video and subscribe to this channel for more retirement help. Contact us today.